So you're still struggling to exit a trade and lock in your profits. And it's not that difficult if you know how. I've been doing this for over 33 years, and I only found out the secret to locking in your profits and to making the most profits much later on in my career, would you believe. I spent the first few years clicking out of trades early. You'll know how that feels. I spent the first few years just clicking out of trades when I felt like it, or even running my trades into loss rather than into wins. I'm going to tell you how to do this today. I'm going to show you on the charts exactly how you can actually get out of your trades with a good profit, where to exit your trades, and the best time and place to do it. But before we go there, remember, if those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob. It's Coffee with Rob, of course, and we're having some coffee before we go to the charts, and before we go and show you all the little secrets and all the little nuts and gritties that you need to know to get out of your trade. A lot of you think it's quite difficult. And the reason you think it's difficult is because it's not about the lines. It's not about the charts. Trading is not about charts. Trading is about psychology. Trading is about fear. And the reason that you're getting out of your trades too early, or you're just not getting out your trades on time, is because of the psychology. It's because of the fear. It's because you're not patient. It's because you have FOMO, fear of missing out. I know, I don't like abbreviations either. They're quite annoying, aren't they? You know, you get all these abbreviations in the market. They drive you insane. The guy comes back from a course and he just starts talking in abbreviations like a pilot. And you just don't understand what he's saying. You're thinking, what are you talking about? Not important. You know what's important in the markets? What's important in the markets is making a profit. Important in the markets is staying in the game and applying your risk management, applying your strategy, which I'm going to get to after we've looked at the charts here and after I've shown you the best exit strategy. So let's not waste any more time. Let me go and show you the best exit strategy, and then you will know how to get out of your trades, won't you? That'll help. I don't know, maybe not. Let's have a look quickly. Let's go and see what's going on here. Now, to get out of your trades, really simple. One of the most important things to understand is you get into your trade and you place your stop loss where you want it. You say, I'm gonna put my stop loss over there. Now remember, as I'm going to tell you in the strategy, there is no such thing as tight stop loss or fast stop loss, or there's an invalidation area. So you've placed your invalidation. Now, initially, this trade, for example, this trade stop loss was down here at 63.6 or 63.8, if I remember correctly. The thing to remember here is you're now looking at a trade that's gone into a solid profit. So this trade is now in a solid, good profit. You've got a target of $658, and you've got a stop loss of $250, which is 1% of your account. We'll go into detail on that now, and I'll show you all that stuff. But now, since you're $337 in profit, don't you think it's a fairly good idea to now actually start to lock in some profit? And now you're thinking to yourself, maybe I should exit this trade and take that profit and walk away. But our simple strategy and our simple business plan and our simple policy in trading, as you know, is to make more on the wins and lose less on the losses. And in this case, you would be making more on your win because you'd be making 337 for a risk of 250. So you wouldn't be far wrong if you were to just sell it and walk away. You'd have made more on your win. But you can make so much more, because if you look at this trade, it's trading in a range, right? So this trade is trading between the 65.7 level and the 64.2 level in general. And it goes from the bottom to the top with the little bounce on the way, and then it comes down, goes up, and then it comes down. And it goes down to the bottom, didn't quite reach the bottom there, but it got close. And then it goes to the top, and then it comes down again, hits the bottom, bounces up, didn't quite hit the top there, and then comes down again. Now, that's not to say that you shouldn't get out of this trade somewhere around this level here a little bit earlier, and that's why I've put my take profit there, just in case it doesn't reach all the way to the top. Now, how do I take the profit on this trade? Because I'm desperate. I'm dying to take this profit, dying to take this profit. Well, the first thing you do is when the trade gets into a situation like this, what was your stop loss? Your stop loss was $250. You want to keep that 1%? Yeah, why not? Let's take the stop loss, move it to $100 in profit, and then I'm still risking $250 on the profit that I've got. But if it comes back and takes out my stop loss, I actually make $100 profit. In other words, this trade now becomes free. It's no longer costing me $250 as it was, and in fact, it's actually making me a profit. But what do I do further? Because this might carry on going up, and I'll still want to get out of it when it gets to this level here. No, when it gets to these levels up here and it's $400 or $500 in profit, then you take the stop loss and you move it right up close. Maybe a couple of hundred, maybe $250, maybe $300 in profit. Now you start trailing it up close. And when it gets really close to your profit up here, you take your stop loss and you move it up pretty close. Because if it carries on and it goes all the way to resistance, then you get that extra profit because you can take your stop loss and move it into that area. And if it breaks out and breaks to the upside, because as you know, we've got 3 ways that we trade. What's the 3 ways that we trade, guys? You should know the 3 ways that we trade. We trade with a trend. We trade in a range. What's a range? This is a range. Up, down, up, down, up, down, up. That's a range. And we counter trade on breakouts. If it breaks out, we trade those as well. Those are the 3 simple ways that we trade. Keep it simple, stupid. That's the policy. KISS, okay? Don't get complicated. Don't have 1 million indicators on your chart. Don't have all the ups and downs, RSI, stochastic, MACD, pi, whatever, Ichimoku. Goodness me, there's so many different things that you can put on this chart that you don't need. Now, you're in a profit. You're moving to the upside. You've moved your stop loss up. You keep moving your stop loss up. You trail it up behind. You never take a profit. You never actually click out of a trade unless you are seriously done with that trade, or you're going into a weekend on a Friday afternoon and you just feel like the world's going to end over the weekend and they might come back and take all your profit, or you just know like it's just time to take that profit. Then there is nothing wrong with saying time out, time to go. It's the same as if you go into a loss and you feel like, you know what, it's time for me to get out of that loss. There is a trade here that's in a loss, my United States dollar, South African rand, and I might look at this and say, do you know what? I think this trade's had enough. I think it's done. Let me get out of it at a smaller loss and just click out of it. You can do that. There's nothing wrong with that. Getting out of smaller losses is like the best thing you can do on earth, rather than letting it run all the way to the 1%. Why do that if you don't need to? If you feel like the trade's gone, it's gone. This trade is not gone, so I'm staying in it with a view to it still making me a profit in the long run. But all I say is you can get out of it if you need to. Whereas this trade, on the other hand, is in a positive. And those are actually more difficult to handle than the ones that are in a negative, because the ones that are going against you are easy to handle. You know you're in a loss. You've got 2 choices. Stay in it and stay with for the whole stop loss, or get out early, dump the trade, walk away and find another trade. If the trade looks invalid, just walk away. It's your best option at the end of the day. Always your best option is to actually walk away from the trade. Now what we have here, it's moving up, and as I say, move the stop loss up behind it. Just trail the stop loss up behind it. You don't have to click out and take the profit. It'll come back. You'll always lose a few dollars here and there, or rands or pounds or whatever it is you trade in. There'll always be those 1 or 2 because it will come back and have to take out the stop loss, and it also depends how far away your stop loss is from it. But look at it this way. Look at trades as the following. Every single time you take a trade, you're paying that 1% for the trade. You're paying that money for the trade. So if you're risking $250 on the trade, then you've paid for the trade. Write that money off and just accept that that's what you've paid for the trade. And then when you get the opportunity to take that risk away and make it 0 or even a small profit, then look at it as, that's great. I've now got a free trade that I don't have to pay for. So now that trade's free. That trade's going to cost me nothing, no matter what happens at the end of the day, and I'm going to make a profit. That's the simple way to look at your trading. How do I apply my trading to make a profit? How do I actually make a profit in the markets? And the simple way is to have a business plan. Now, I always ask people, would you start a business without a business plan? In other words, you don't have to have a 1,000-page business plan, but you have to agree with me that you would want to know where it's going to be, how big it's going to be, how much capital you're going to need to start this business or run this business. Will you need staff? What kind of business is it going to be? Is it going to be a factory, a shop? Am I going to make something for someone? Am I going to sell something to someone? Am I going to be the middleman? Am I going to be the actual person who creates the product? There's so many questions you have to ask yourself before you start any business. All these questions that you don't ask yourself when you start trading, and that's questionable. How is it that you get involved in a business like trading, which is serious money in most cases, and the first thing you don't know is how much capital you need? For whatever unknown, phenomenal reason, so many people get involved in trading with very little money, believing that they're somehow going to turn this into a gargantuan amount of money because someone on YouTube, like me, told them they could. And well, not like me, because I don't tell you that you can. I actually tell you that it's very difficult to do that. Now, just think for yourself. Where can you take $5,000 or $10,000 and double it in 12 months? Where? Where are you going to go in the world? And where are you going to take this money, actually double it in 12 months? Where can you go and do that? Well, I can tell you right now, just about nowhere. Absolutely nowhere. So the psychology is, but if I go to trading, I can do it there. Now, that's the psychology behind it. That's what you've been told, but that's near impossible because there's two ways that this can go for you. The one way is you could double the money and you could do extremely well if you're quite not risk adverse, if you're quite risque and you want to get in there and take the risks. But the other way it can go is it can go to zero. If it's the last money you've got in the world, if it's the only money you've got in the world, the possibility of you being successful is about 5%. Because the psychology behind it is going to stop you from being successful because you're losing the last little bit of money that you've got in the entire world. You haven't got any more money than that. Now, you risk it. You put it out there. You're going to mess it up. The likelihood, the biggest possibility is you're actually going to lose that money because you're just going to risk it with trying to get it back and trying to revenge trade it and you're going to make every single mistake in the book. Whereas if it's not your last amount of money, then you might have a better odds, or you might have better odds, you might have a better chance of actually making that money back. The only way to make money in the market is with a proper business plan and a proper strategy. And what is that business plan and strategy? It's the one I give you in every single one of my videos, and that is simply learn how to manage your risk and learn how to manage the trades and separate your business plan from the charts. You need the charts. You need the charts. You need the charts to produce that, how can I put this to you in a nice way, to give you that trade, to give you that ability to manage your trade, because it will give you the high probability trade. But when it comes to making the money, charts can't predict the future and neither can you. The only thing that you can do is try to make more money on your winning trades. This is the same policy as if I toss a coin 10 times and it lands on tails 5 times, it'll land on heads 5 times. If I give you 2 for every heads, I don't know anyone on the planet that wouldn't choose heads because the odds would be in your favor. Everyone chooses the better odds, particularly when they're kind of taking a chance on something. Well, now you understand this. Now you understand this and you get into trading, yet you still think a win rate's going to somehow make you money. But all a win rate's going to do is give you a winning trade, right? Every single trade you win $10. But for every single trade you lose $20. clearly you're going to be in a loss because you're losing more than you're winning, and that's not going to be good for your trading in any way, shape, or form. The answer to this is simple. That is what I do, is I risk 1% of any particular account on any trade, on every trade, the same amount. It doesn't matter what kind of trade, whether it's crypto, whether it's index, whether it's Forex, or whether it's one of my favorite indexes or not, they get the same treatment. So they get the same risk. And in my case, it'll be 1%. In your case, it might be 2% or 5%. But bear in mind, if I lose 10 trades, I lose 10% of my account. If you lose 10 trades and you're risking 10% per trade, you lose your whole account. Slight difference there, just a touch. Now, what you got to do is say to yourself, all right, I'm risking 1% on every single trade, which is the same amount, but how do I do that? How do I manage this trade in such a way that I can ensure that I'm going to keep the risk the same? Because trades are different and the stop losses have got to be in different places. Let me show you on the chart again quickly how you do this. So, okay, we've still got this chart here. What I'm going to do, I'm just going to take this one away, and I'm just going to show you how you actually place your risk on a trade. And let's say I'm going to use the S&P 500 as a really, really good example here, I think, because let's say I wanted to go long on the S&P 500. Let me just say that. Let's just say I wanted to do that. How would I go about this? Let's say I wanted to take the long from that point there, and I need a $250 stop loss. So what I would do is I would say, okay, I want to take my trade from this point. I need a stop loss that's $250, and I need a target that's more than my stop loss. Simple, really. Now what I do is I say, I want my stop loss in an invalidation area. In other words, an area where I know if the price gets there, it's completely invalid. So what I'm going to do is I'm going to put my stop loss down here at, I'm going to put it sort of, it's got to be below this line. It's got to be below that level where the money is. And it's got to be invalid. So when I look at it, I've got to say there's no way that this can come back. So I'm going to kind of put it in the middle there and say 64.20 is my stop loss. That's as simple as it gets. Then I'll work out how many lots can I buy back to this cost, $250. How can I work that out? So it's quite simple, really. What I do is I'll say, I want to buy this, okay? I want to buy it at that price. And all I do is I go to stop loss and I say, I'm going to put my stop loss at 64.21, 64.21. I'm just using this as an example. I'm not going to buy it. That will give me a stop loss of 78, but I want 250. So 0.5 will probably be it. No, 0.6 will probably be it. 0.6 close enough, $234. It doesn't have to be exactly 250. There you've worked out how many lots you're going to buy, 0.6. And then you can just put your take profit up and say, well, I want my take profit up at 6,600, say, and that would give me an $839 profit. Simple as that. That's how you take your trade. Then you would click buy, and that would be it. I'm not going to buy this because I don't want to buy this right now. I'm just putting that in there as an example. So that's how you take your trade, and that's how you manage your trade. You see, what you've got to look at is that is an invalidation area. And you've got to look at it and say, if my price hits there, I don't want to be in the trade. That's it. I'm gone. I'm out of here. That's as simple as trading gets. It doesn't have to be more complicated than that. I don't know why you guys want to make it more complicated than that. Now you've managed the risk. Now you've got a strategy. When the price goes up, you do what I taught you in the beginning, and that is you don't just take profit, you follow it up with a stop loss, and that's it. You see, charts are not predictive. They cannot predict the future. They can only give you a probability because humans are creatures of habit, and as creatures of habit, we tend to do the same things over and over again. And when you're looking at a chart, there's a human being behind there, not some mathematician, not some algorithm, nothing like that, not some robot. It's being run by human beings. There are human beings behind that taking buys and sells. And as a retail trader, as a you and me, we are not moving the market. We are riding on the wave of the market. Big money is moving the markets, not you and me. Get this through your head. We are not moving the markets. We are in the markets, and we are moving with the flow of the markets. That's how we roll. That's how it goes. There's no way around that. It's never going to change. I hope that helps you guys somehow. If not, then, I don't know. Join the members area if you want to trade in the day every day and a few other perks and whatnot. It's down there. There's a join button below the YouTube videos. They normally put it in there. And do me a favor, if you've enjoyed the video and you've watched this whole video, then at least subscribe and come back and watch another one and enjoy yourself with us. Join us for the live shows on Tuesday and Thursday, where we get together as a team and we trade together and we talk about trading. And I try and give you guys a little bit of insight from my years and years and years of trading and see if it helps you in any way, shape, or form. But for now, guys, keep your feet on the ground, reach for the sky, and have a wonderful trading week ahead. Make lots of money, and I'll catch you on the rebound. See you soon. Cheers. Ciao. And bye.